Great Wednesday. What's up, everybody? Wednesday morning. Hope you guys are having a phenomenal day. We are about to do our morning market commentary. Hope you guys all had a great day yesterday. Taking a look at the markets. Yesterday, we had our live trade room, so no DMC yesterday. But today, we're going to take a look and see what is happening. If you're new to the channel, click the subscribe button, hit the notification bell so you get the alerts and the updates. In the comment section down below, why do you think yesterday we saw such a divergence? Why do you think that happened? Yesterday, we saw the Nasdaq came down almost 2%, while the Dow reached to a new high. And so, what is the reason for that? Why do we see that divergence? We'll talk a little bit about it today, but I'd like to hear your thoughts in the comments. All right, let's go ahead and get started with the big picture. So, looking first at our big picture, we're going to begin with the S&P 500. Now, looking here at the S&P, we did pop yesterday above our breakout line. So, popped above our breakout line. And things were moving along rather swimmingly in the morning above our breakout line, and then all of a sudden, kapoosh, we just came back down pretty hard. Really kind of an unexpected drop early in the morning with the S&P. Really anticipated price to continue to rally higher off of that initial breakout. And so now when I look at this, if I go to a 4-hour chart, our sideways price action is pretty clear, right? It's a fairly sideways movement in price. Now, I will say the Nasdaq was a bit more surprising. I anticipated the Nasdaq after our breakout here from the bull flag pattern we had. After the breakout from the bull flag pattern on this green candle, I anticipated continual run higher. But the Nasdaq did show a fair amount of weakness overall. Now, that weakness did drive the market up to a level that was going to make for a pretty good breakout trade the next time price come into that region. However, we sold off really hard early in the day. Now, we did come back down to a fairly decent area of demand, not quite giving us a clean entry, but that actually sets up for continued weakness with multiple touches now if we get basing below this region. So technically, looking at this, our 4-hour trend is, we didn't quite get a higher swing high on our 4-hour trend. It looked like we were about to get one. We did not. We did, however, get a lower swing low. And so technically our 4-hour trend, while I thought it was going to change directions, has not done so. It's still a bit of a 4-hour downward trend. And so shorts are technically the better trade ideas at this point. Now, if I go into this thing on a 15-minute chart, we look into the much smaller time frame. We have a little tiny area that was formed just about 4:45 this morning. There's another area up in here that was formed right around market close yesterday, but that's already been retouched this morning. So, there is that little area there for those of you that are day traders and want to give this a run. Put the wrong color here. Let me make this pink. So for those of you that are day traders who want to give this a run, then certainly that would be the place to do it. Would be right up there, and our number on that is 16224 by 16233 for a potential short in the Nasdaq. Now, we did see the Dow Jones yesterday give us a bit of a breakout trade and continue to rally a bit higher. We did break out above in the Dow Jones, continued to rally a bit higher, and saw a pretty strong move. Now, throughout the rest of the day, we got that move early in the day. As the rest of the markets came down, the Dow Jones then went up. But then the rest of the day, it did not come back to those highs. And so I think that we could see, if the other markets start to sell off a little bit, we could see the Dow Jones follow suit a bit today. Now, why would that be? And that would be because a lot more stocks, a lot of the leaders really just didn't move a lot yesterday. If I go to my FANG stocks, you go to something like Apple, which is typically going to be your big boy, and it came down yesterday. We saw Facebook come down a little bit yesterday. We saw Microsoft come down yesterday. We saw Amazon with a big red candle yesterday. We saw Google just kind of go nowhere, a big nothing burger. and we saw Netflix come down yesterday. So we did see a lot of our FANG stocks come down yesterday, while we saw, stocks like Wells Fargo. We saw stocks like Wells Fargo have a big, strong up day. So what we saw were stocks that were in the financial sector take a really strong move higher, while stocks in the technology sector overall had a down day, and that really is what set up the difference in our, the technology sector as well as our consumer discretionary sector. Both had a down day, and those are going to be the ones that we need to pay. That we need to pay specific attention to when we're looking at a divergence between markets. Now, a couple of other trades to look at. We had looked at crypto futures yesterday, and that's on Monday. That's one of the things we said we're going to start looking at. And so, in looking at that, the micro Bitcoin futures, we did see that our supply level here has not yet been tested. We came, in the area of it, but did not get into it, and so no real trade setup existed for this micro Bitcoin futures. I still think that this below 45,578, we may see a bit of a breakdown, so keep an eye on that area going forward. Looking at this on a daily chart, you do have a nice little wick over wick down here, and then you've got a really nice gap fill area over here, but that's much, much, much further away. That's pretty clean right there on the 4-hour as well at 44,000. And then the Ether futures. So we did look at the Ether futures, and we did rally up into this area of supply yesterday, and then got a pretty nice sell-off. So hopefully some of you were able to grab that little trade and turn that into a little bit of coin yesterday when looking at the Ether futures. Looking at some of our energies and metals positions, crude oil did rally up a little bit yesterday, but we're still very much range bound. We actually looked at an 81 by 71 iron condor yesterday in crude oil. That's a 10-day iron condor. It was a 71 by 81. And so yesterday we did pop up a bit, but certainly not enough to get us out of our most recent range. I think that our next best setup in crude oil is going to be waiting on a breakout right around 80, where we have 1 touch, 2 touch, 3 touches. That would be the best breakout somewhere up above that region. Looking over at gold, we have rallied back up in gold to a pretty good area of supply. I will tell you that I am not a huge fan of our arrival into this level. And the reason I'm not a huge fan of our arrival into this level is if I think about where my stop has to be, right? Looking at this line, where does my stop have to be? Well, the absolute tightest I can make my stop is I've got to take the 15-minute chart and use the leg in candle and take the wick outside of my leg in candle. So that would be my risk area right there. Let me make that red just so everybody knows why that's our stop loss. So going back to my hourly chart, if that is my distance for risk with an entry here and a stop here, this would be a 1-to-1 reward to risk. This would be a 2-to-1 reward to risk. And when I look at my opposing area of demand, I would say that your opposing area of demand would be right here. Well, that means that my opposing area of demand is at about a 1.5-to-1 reward to risk ratio away from entry. Combine that with the overall move higher, having some basing in front of the level, and it becomes a much less probable zone. Now, if you want to take it, one of the things that is pointing to a little bit of a higher probability is the selling pressure going into that zone. Looking at these upper wicks, that tells me that there is a bit of selling pressure. So that selling pressure does bode well for you coming into this zone. So one of the things I would say is if you want to take this short, take some money off the table at about 1-to-1 or 1.5-to-1, only because of your opposing zone being so close. Another one I want to look at this morning is the Great British Pound. Excuse me. Great British Pound. I was going to say Canadian dollar, but it was the pound. So looking here at the pound, I do see that we reversed at this confirmation demand area, got a nice move up. So let me remove these levels at this point. Looking at this on a daily chart, we are seeing once again the pound kind of continuing to climb. On our 4-hour trend is still a bit higher, but we've stalled just a smidge here. So that's why I would look for a breakout trade above this region here. I think that this is setting up for a bit of a breakout trade, and I think that that could be an area where you can see a little bit of a run higher once we hit this region for price to go up into this zone. So keep an eye on the Great British Pound for today as well. Energy stock, I want to take a look at a stock of the day that's worth considering. We actually had a breakout trade yesterday in FANG, Diamondback Energy. I had a dear friend who told me about Diamondback Energy a while ago, and I've been looking at it a little bit more frequently ever since. We did break above all-time highs yesterday in FANG, all right? And we are just above some all-time highs. If I look at that on a weekly chart, right, going back all the way to here, you can see that we did poke just above some of those highs. Now, breaking above those highs means that I've got no real resistance up above me to really pay attention to. Now, if I go back 10 years, I've got some resistance, but my resistance doesn't come into play until somewhere up in this region. So I got plenty of room. I say all-time high. In reality, it's just a high we haven't been to in a really long time. I've got plenty of room to run from this region. So what we would look to do is to get long on a bit of a pullback. And if you look at this on an hourly chart, your pullback could be a pullback back to the all-time high, but your better pullback is going to be back to this gap area here at around 112. So if we do get a bit of a pullback, a bit of a retracement, you've got a gap fill area down here at about 112 as an opportunity to get long. If you don't love that one and you're more of a swing trader, you can wait all the way for the origin of this move higher. Now, I will say that these levels both have some validity to them because they got us to a new high, and that's really the main reason. All right. Well, that's all I have for today. I hope everybody has a phenomenal day. If you have any questions, as always, send us an email, support@tradersarmy.com. I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.